What is an inducement and how can you use it to avoid more losses and take more wins into your trading strategy? All right, I have an example here on the chart. Let's dive in and see how we can dissect it. So what we can see is simple market structure stepping up, creating higher highs and higher lows. And we are talking about a bullish scenario in this case. All right, follow me for more of this content. So definitely hit the subscribe button, put a comment with your question so I can go over it, make a new video about it whatsoever. Happy to help you all. All right, let's dive in. So an inducement is, in this case, an entrapment, so to say, attracting buyers into the market on very obvious places. But what we have to understand for inducements, we have to understand what other participants in the market are doing. So we have a few examples. We have support and resistance, we have trend line, we have market structure, we have Fibonacci. So we have a different case of traders that are getting induced in the market when they see confirmation lining up. So in this case, what we can see is that we have a resistance area here that turned into a support area. We have a trend line building up, first touch, second touch, potential third touch. We have a POI. And you can imagine how many traders will be induced in this region. For market structure traders, right, we could clearly see that they want to enter where the POI is. For support traders, they want to enter where the support is, and for trendline traders, they want to enter on the third touch of the trend line. So what is the best thing to do? Well, the best thing to do is to wait for all those traders to be taken out, because what we often see is when those traders are taken out, we see the big move happening. All right, an example. So who's getting involved, right? What we can see for this type of price action, let's say we are coming into the London session, London push all the way down into the support zone, into this POI and into this trend line. And what we often see is that buyers getting in early. They get the confirmation, they're going to enter on longs, but what we often see is that they're getting stopped out and then the market moves in its initial direction. But what if price takes them all out? What happens when price sweeps a support, sweeps a trend line, breaks bearish market structure in this case? Well, we have something that calls breakout traders. Breakout traders entering on short when the support is broken. They also entering on shorts when the trend line is broken. So when we sweep this whole area, it's not about the sweep, it's about understanding who's getting into the market. Well, breakout traders, break and retest traders are coming into the market. How would it look like for a breakout trader? Price breaks, buy stop, sell stop, whatever, be activated. They participate on a bearish movement. Then we have break and retest traders. They wait for price to tap back into that resistance zone, right? We have a support flip turned into resistance zone and they enter on shorts. So when we see a sweep of those liquidity areas, then we know that other traders are coming into the market. And when we know when other traders are coming into the market, well, what do we have to do? We have to go in the opposite direction. That's how my strategy works. That's what I share in my free Telegram channel. All the insights on every trade I take is shared over there. The link is below in the description, so definitely join. All right, so what would be the best time and the best entry or the best confirmation, so to say, to wait for before entering on a trade? What we would love to see is price takes all those buyers out, liquidate them, they are getting induced all the way here. Inducement is done for buyers. Now we want the opposite traders to be induced, sellers in this case, right? We break through, breakout traders, break and retest traders that all entering on shorts are getting induced in the market. And this is what I wait for, and so to say, the last inducement. But what happened when we take out this whole area of support, trend line and POI, demand zone, whatever you want to name it? We create a new bearish range from this high to this low. And this will activate new and even more sellers in the market. Smart money traders anticipating on price coming into the last POI. Fibonacci traders, they're going to draw this and they wait for price to hit their golden pocket. And what we very often see is that those are the last one to goes. Now we can target them and take all their liquidity out. So how would this look like on a real live chart example? Well, I do have an example here. It's also a live trade I caught and a trade that I shared in my free Telegram channel. And what we can see if we give this a few more sessions, let's say 5, because I always trade the London session because pre-London there's so many liquidity buildups, right? And what we can see is pretty clear. Starting on the hourly, 4 hour is in a bullish range, and don't mind this one. Let me see if I can delete that one to make it a little bit more clean. Okay. All right, so more clean. So what we can see is the 4 hour is bullish, but the hourly was stepping up quite clean towards the upside. And then what did we had? We had a bearish break of structure, and then in the end we had our major break of structure. So when when price comes bullish, and note this, that we are in a daily major POI, and this is of course where sellers look for short confirmations. So sellers getting induced by that bearish break of structure on the hourly, right? This is price coming into that major area, price breaks bearish on the hourly. So structure traders, Fibonacci traders, whatever trader is looking for shorts when we see that bearish break of structure. But then quite clean, on the 50 minutes, what we can see is that price built a whole support area down here. Pre-London, price comes up, gives a bullish reaction from that support area and taps in what? A resistance area. And now things are getting way more interesting, because imagine how many traders are getting induced currently, right? We see bullish market structure, buyers getting into the market. We had that early 1 hour bearish break of structure, sellers getting into the market. Price comes up, creates a new bearish range, creates a support and resistance flip. So resistance traders also getting induced into the market to go short. And the moment when we saw that big sweep of liquidity, and I think it was exactly at 8 a.m., around that time, it's an hour prior to London, but we can see that the whole liquidity is being built up. I entered somewhere here, don't recall the exact entry to be honest. I had, I think, a 17 pip stop loss or so. Doesn't matter too much. This was my target, 1.9. So I think it was a little bit more. Something like this. I made $1,900 on this trade. So pretty easy. And what we can see is that all those people getting induced, the breakout traders getting short on the break of the support. And what do we see, right? They getting induced. They are the last ones to go. And we can see that price comes into that resistance again, gives a bearish reaction. Look on the 5 minute, there is no joke here. This happens time and time again. Taps into the resistance, breaks bearish. Well, what do we have? Bearish break of structure, sellers coming into the market from all these supply zones. Price steps in, comes down, breaks bearish market structure over here. It's so clean, it's so obvious. Again, more sellers getting induced, and price starting to rocket off again. What do? Target opposite liquidity, equal highs, or so to say, support resistance from this area. That was my target. And so you can see that there are so many sellers getting induced into this market. And the only thing we have to do is read price action like a very professional. And when we understand the market and we understand what an inducement really is, now we can counter trade all those other traders and have a very high success rate in our trading strategy. And yes, I have losses too. I have around 60-65% win rate. So in many cases, these things don't work, but very often they do work. And there are so many live examples which I can show you. Even if you're in my Telegram channel, you can see it day by day, time by time. I do market outlooks, everything for free, just to put the education out there. And there are so many ways where we can see these kind of things playing out. And now you understand, right? This is what an inducement is. An inducement is nothing more to attract a buyer or a seller into the market, and market makers create this stuff. The markets are rigged, 100%. All right, if you like this video, again, give me a like, subscribe to my channel, join my free Telegram channel, and what kind of video do you want me to make next? Put it into the comment section, and let's see if I can make a new video about that anytime soon. Thanks for watching, and see you on to the next one. Cheers.